And we are live. So, welcome everybody back to Thursday Morning Industry Experts. And today, my lovely guest over here is Michael Holmes with Delta Credit Restoration. Hi,
Hello.
Michael.
How are you?
I'm good. How about you?
Fantastic. It's almost Friday.
Right. That's exactly how I feel this week. So, well, anyway, we have been experiencing quite a bit of business recently and super excited about all of that and seeing it. So that means that the real estate transactions are still happening out there.
Yes,
And
yeah.
Michael is your credit expert, and we love talking with him. He's quite a wealth of information. So we're going to ask him to tell us a little bit about himself and how he got started with credit restoration.
Well, I was a banker with Fifth Third Bank at the time. I was managing some offices downtown, and I was actually referring a lot of my clients to these credit card companies, hoping that they'd come back and get fixed and get these loans and all that. And they never came back. They just all got ripped off, really, to be honest with you. So I started helping them, and one thing led to another. And now, 10 years later, here we are. So we really didn't start the company to help people fix their credit. We really started the company to help protect them against other credit repair companies. If that makes sense, because I just couldn't refer them out anymore. So that's kind of how we all got started. We used to be called Gorilla Credit Restoration, but we spelled it like Guerrilla. And no one could spell that, and it was a big marketing nightmare because had an actual gorilla as the mascot, so we had to change it up. We changed it to Delta, and here we are 10 years later.
So interesting. I'm going to step you back for just a minute. So you started your company
Correct.
due to the fact that you did not have any reputable credit repair companies
Right.
that you could refer your business to.
Right, which is
Right.
it's a very common theme in this industry. Unfortunately, it's just I always tell people 99% of the companies that do what we do are fraud. Even the big ones, even the nationally recognized ones sometimes have either methodology or intent that kind of borderlines on ethics and fraud, and they get sued and all that other stuff. So you got to be really, really, really careful when you're dealing with a credit repair company. Do your research on them. There's some good ones and there's some bad ones, just like in the industry. You know what I mean? So
Sure.
you just got to be careful.
Well, and we definitely know for a fact it matters who you work with. It matters who you
Yeah.
refer,
Yeah.
right? And
Yeah.
all of that then makes your life either easier or harder. So it is
Exactly.
important to make sure you're doing your research. Okay. So what exactly is it that your company would do for a potential client? Say
Right.
they attempted to get a mortgage and they did not have enough
Right.
high enough credit score. What does your company do for them?
Well, for us, it's really about what the customer is there for. Most people come to us because they want to buy a home. Some people, I got one this morning that needs to get a security clearance. Some people are trying to start a business. Some people are just trying to get out of debt or avoid bankruptcy or foreclosure. Some are dealing with student loan issues. There's a variety of reasons why people come to us. The number one reason by far is they want to buy a home.
Right.
So for us, our approach is a lot different. What we'll do is we'll actually use the underwriting guidelines of the loans that they're going after as the benchmark for the credit repair. So whether they're going FHA, VA, USDA, conventional, SBA, whatever loan type that they're really trying to seek, car loan, credit card, whatever, we'll show them the guidelines of the loan. Again, I used to be a banker, I used to be a mortgage lender, so I can show them what the guidelines are, show them where they're at, and then from there we create this plan that's a little bit more holistic. It's not just the score, because you can walk into the bank with an 800 score and still get declined. So we've got to look at their debt to income, their credit scores, their work history, and all these other things. And what we'll do is over the course of, say, 4 to 6 months, typically, we'll start to shape them into a lendable form. But at the same time, what we're also going to be trying to do is fix the credit behavior. And for us, that's kind of our mantra, is that I really don't care what their credit score is. What I care about is the behavior that's going to lead to the score, because it leads to longer term results. I can delete everything off the credit report, but if I don't fix the reason why those things were on there in the first place, well, then we're going to have a repeat customer and love them to death, but I don't want to see them twice, right? So we want to
One
make
and
sure
done.
yeah, we want to make sure that we're going through the motions of, okay, well, what got us here in the first place, and
Okay.
how do we fix that so that not only are you lendable, but you actually have good credit, as it is a behavior, not a score.
Okay. So what is the difference between being lendable and a good credit?
Well, the lendability part is the numbers, right? That's the credit
Okay.
score, the debt to income ratios, the numbers, the income levels, work history number. Those are the things that the lender's going to look for from a numerical standpoint. The
Okay.
credit is the behavior that got you there. So it's having financial safety nets in place. It's being properly insured. It's about having a budget in place. It's about paying the bills on time and being cognizant of what's going on around you financially. For us, credit is about financial buoyancy. It's about being able to protect yourself against the inevitable. People come to me all the time and they say, "Oh, I only have bad credit because I got divorced, or I got laid off, or I had children, or something along those lines, got hurt," right? Well, the
Right.
truth of the matter is that really happens to everybody. The question is are you prepared? And that's
Gotcha.
what we do, is we prepare them financially and behaviorally so that they are prepared for the inevitable. So we start with the first behavior being simply cognizant of what's going on around them financially, what's coming in, what's going out, where's it going, how much is it costing them, that sort of thing. And then the second part is that they've established financial safety nets, savings, available credit, that they're properly insured, and that they've got investments. Those four financial safety nets will protect them against the inevitable and create that financial buoyancy that they need to withstand the inevitable, like I said. So, and in the course of all that, they can buy a home, refinance their car, and all that, because now all those bullet points that the lender's looking for from both a credit perspective and from a lendability perspective, they've got it all lined up.
Very good. I love it. I love it. All right. So, what is or is a oh, I'm sorry. What is an acceptable credit score in today's environment?
Again, it depends on what you're going for, but really, to be
Mhm.
honest with you, anything above a 640,
Okay.
you're going to qualify for pretty much anything that you want, with the exception of maybe a jumbo mortgage where you have a mortgage over, I think, what is it, 425 now or something around that number, and some business, or commercial products.
Okay.
But credit cards, car loans, that sort of thing, you'll get qualified. So we like our customers at a bare minimum of a 640, but obviously a really, really good score is about a 700 score. You don't have to be in the 800s. There's really nothing that you can't get in the 700s that an 800 is going to really afford you anything better of. But
Okay.
really, you want to maintain your score somewhere around 700 range.
Okay. And what is the best way for me to find out what my current credit score is?
Well, that's a lot harder than one might think. What people don't understand is that there are 64 versions of your credit score, and each one goes to a different industry. So whether you're trying to buy a car, rent an apartment, get insurance, get a mortgage, all these different industries have a different bureau and a different score that they, or should I say, a different credit report, and a different score that is customized to that industry. So again, we try not to get too hung up on the score because, again, every lender is going to have a different palette, and every place you pull is going to pull something a little bit different. But if you want a mortgage score, if you want to know what your mortgage scores are, the only retailer of credit reports that provide the actual mortgage score is MyFICO. So you're going to want to go there to get your actual mortgage score, because if you go to Credit Karma, if you go to Identity Guard, if you go to Veritas, Credit Wise, all these other places, they're going to give you other scores that aren't really used in any real industry. It's not that the numbers are wrong; they're just a different version of what you're looking for. And also, you want to pay attention to, well, which score is the lender going to look at? So, there's primarily the three: Equifax, TransUnion, and Experian, but most of them will use either the middle score or a median score or the, one of those three scores. So the number one way to make sure that you qualify for whatever you want from a score perspective or any other kind of lending guideline perspective is have that conversation with the lender first before you apply, and then prepare your credit to meet those guidelines, which is exactly what we were talking about before. Find out what the guidelines are first, fix yourself up, then apply. It just makes it
Okay.
easier.
Okay. Um, uh, if I have issues, give me the top three things to do to fix the issues.
Well, the top three things that we always go with our customers with is the first, create a budget. Again, cornerstone of your credit repair is not found in your credit report, it's found in your bank statement. How you handle your assets will determine how you can handle your debts. So before you start going into some big plan on how you're going to fix your credit, you got to get your budget right first to be able to do that. You're not going to get everything deleted off your credit report. And there's certain things like judgments and things like that that could be on there, repos. Those are things that you're going to have to resolve, and it's going to require some cash flow. So first, make your budget.
Okay.
The second thing you want to focus on are really the balances on your revolving credit. That is one of the easiest things to do to prepare your credit because it does so many different things for you. If you pay off a debt collector, you might raise your score a little bit. You might change the debt to income ratio just a little bit, but really by paying off credit cards, one, you raise your score by as much as 30%. You establish that credit card as a financial safety net instead of just another bill. And third, you'll actually decrease your debt to income ratio because your payments on your credit cards go down as the balance does. So no balance, no payment, more money in your pocket every month. And lenders like that. And then the third thing, again, is to communicate with the lender. Because before you start paying stuff off or fixing things on the credit, you may be throwing good money after bad or fixing the wrong thing or doing the wrong thing like closing accounts and that kind of thing, which could actually work against you. So most of what I would say is the only thing that's a surefire win every time is paying down the credit cards. The other two are really more preparatory type stuff.
Gotcha. And I've heard the lenders say that before, like, don't close your credit card,
do not
right?
close your
Because
account, right?
that actually shows that you've got buying power if it's not maxed out, right?
Right. Well, the thing is that if you've got a credit card and it's maxed out, the lenders know that you're paying 18 to 25% on that money.
Right.
And the question becomes, well, why are you allowing that to happen? And the truth of the matter is the answer is they don't have a choice. And lenders understand that. So if you're riding out you're paying out 20, 25 cents on the dollar on borrowed money, well, that's kind of a red flag. So paying those accounts down is a big deal. But closing accounts, what that can do is shut off the payment history category in your credit score, as well as shift the average age of your accounts, both of which could be very detrimental to your score. So again, before you start closing accounts out, like loans and that kind of thing, you want to have that conversation with your lender to make sure that you're doing the right thing.
Okay. And guys, if you're online with us and you have any questions for Michael, he's more than happy to answer them. We just figured like top 5 questions to kind of ask and get some answers for today. And
Sure.
so one of the last things that we wanted to kind of talk about, and I know so many people actually struggle with this one, that is student loans. And let's just keep it to mortgage, right?
Yes.
What effects does student loans have on mortgages, and how can someone fix that?
Well, it depends on your loan type. So first off, if you've got a lot of student loans on your first off, if they're in default, the first thing you're going to want to do is you don't want to just pay it and get it on a payment plan. You want to rehab the loan. It's a 9-month process. There's really no way around that. But it makes such a dramatic difference on how it reads on the credit report, how much it's going to cost you over time. Because when a debt collector gets your student loans, they automatically tack on 18%. And if you rehab the loan, they will give you back the 18% and actually make it a positive trade line on your credit report versus just starting to pay will keep that 18% on there and be still derogatory. So you want to rehab it first. The second thing you may want to look at is if you've got a lot of student loans, chances are you're either in an income-based payment or a deferment or something along those lines. And if you're using an FHA loan, that doesn't go over very well because they're not going to accept that zero payment or that $5 a month payment as your actual payment. They're going to take 1% of the outstanding balance and use that as your payment, and they'll use that against your debt to income ratio. So let's say you've got $50,000 worth of student loans. Well, that's a $500 payment. And as a result, you may have perfect credit, 800 score, but now you don't look like you can afford a loan. So you're going to have to either A, switch over to a conventional product where there is no government backing and the lender can take whatever payment they want as the actual payment, or you're going to have to change the payment type of the student loan to either a standard or an extended standard payment so that the debt to income ratio doesn't get thrown out of whack on 1%. Now, if you're going VA, it's 5% divided by 12, but you can start doing that math up front. And again, if you've got a lot of student loans and you're about to apply for the mortgage, what do? You have that dialogue again with your lender. Hey, I got $200,000 in student loans. How are we going to address this? How is this going to affect my lendability? And what loan product should I be going into that's going to best fit what's going on in my life right now? So student loans are always the last thing you learn from school, right?
Yeah, right. That's a good way to put that. The last thing you learn from school. And it's a lesson that stays with you for years, decades sometimes.
Yeah, and they don't go away, unless you went to school that's, fraudulent, or you're a service member, or in a nonprofit industry. Most student loans are not going to be discharged. And I don't foresee that any government is going to just say, okay, we're going to excuse all student loans, because for the United States, that's income, right? It's a government-backed loan. So for us, for the U.S., it's an asset. And if they just forgive it all, then that's a couple of trillions of dollars or whatever in student loans that we're not going to get as income. So they're not going away, but you can work around them if you can communicate well with your lender.
Okay. So one thing that I wanted to just circle back around, I got a default on YouTube. What was the best website if I were looking to get my credit score from, or if I was looking to get my credit score, what's the website?
DeltaCreditRestoration.com. That's the best place to go to.
But you said my FICO, right?
Right. Well, if you want a mortgage score, you can go to myfico.com. We've got a review of Credit Karma on our YouTube channel. If you want to kind of get better explanation as to the good and the bad and the ugly on that, but Credit Karma, I like. There's only 2 out of the 3 bureaus. You can't trust the score at all, but it does update every week. So as you're fixing your credit or you're working on your credit, you get updated a lot faster with Credit Karma, and it's free, right? You can't beat free. Right. So just don't trust the score at all, and recognize that there's this whole Experian bureau that's missing. So I always say, if you're going into a lending, trying to get a loan, you start with Credit Karma. And when the score starts to matter, when you're getting near the end, that's when you want to start pulling from somewhere more reputable, like MyFICO, because you're going to be paying for that stuff. So it just kind of puts, that $20 or $50 or whatever you're spending a month on credit monitoring at bay until you really, really need the scores.
Okay. So, Michael, how do we reach you?
Good question. You can always reach us here at 813-567-5855. Like I said before, you can always go to DeltaCreditRestoration.com. We're here way too often. And also, if you want some self-help tools, we do have a channel on YouTube. You just look up Delta Credit Restoration on YouTube, and we've got 80 plus videos there, I think now, that kind of gives the backstory of what we do. Really, the truth be told, when it comes to credit repair, people always bring up, well, I could do that on, you could do that on your own. You don't need to pay a credit repair company. And you're absolutely right. And that's why we have the self-help tools on our channel, so people can help themselves. Just recognize that you can always cut your own hair, change your own oil, and represent yourself in court too, right? Sometimes getting help is very helpful. Credit repair is not rocket science, but it's not basic math either. So definitely do your research, use the videos, give us a call. If you're shopping around for a credit repair company, recognize there are some red flags out there and should never be charging you up front. Here in the state of Florida, you do have 5 days to cancel without any financial obligation. They shouldn't be promising deletions or promising credit scores within a certain amount of time. All that stuff is considered fraud and illegal. So like I said, just do your research, use the tools that are available to you. And if you have questions, ask for help. We always give free consults. So make an appointment. We'll be more than happy to give you a couple hours of our time just to get you on the right track.
Yeah. So, if you're looking for credit help and not quite sure where to turn, Michael is a great resource. I know he works with thousands of people every year
Yeah,
to assist them. And I've seen his YouTube presentations, and I got to tell you, he gives you some good, solid
yeah,
information. If you're trying to really
it's the
understand
real
this,
stuff. Yeah.
this piece of the puzzle, he is a great resource to have in your hip pocket. Michael Holmes from Delta Credit Restoration. Thank you for being my guest today.
Thank you for having me.
You're welcome.